Hey everyone, and welcome back. I'm your host, Financial Climbs, and today I'm going to discuss three stocks with insane growth potential. Now, despite the global tensions, as you can see here, the S&P 500 is in the green, showing that investors are focusing on earnings and fundamentals. These picks could be game changers, guys. And before we dive right into them, let's have a quick look at the S&P 500. Last time we spoke, we discussed the price falling below the $6,000 mark at the end of the week. Now, what we've seen on Monday is a rise well back up to the 6,000 level, almost 6,050, before moving into this slow decline. Now, why is this the case? Well, investors seem focused on strong company earnings and positive economic data, which are helping to balance concerns over a global conflict. Oil prices have jumped, but tech and consumer stocks are leading the market higher. The Federal Reserve hasn't changed its stance on interest rates, keeping things stable. Overall, the market is holding strong, showing that investors are looking beyond short-term events and focusing on long-term growth. So let's dive straight in to stock one. Today I've got Navigator Holdings, NVGS. This is a shipping and energy transportation company. Now, why is it undervalued? Well, Navigator Holdings is trading at a decade low valuation, guys, and if we just look at that all time, you can really see that we are really at a low point at the moment. And now this is despite delivering record time charter rates and a strong Q1 earnings too, guys. The company has expanded its fleet and Morgan's Point terminal, positioning itself to capitalize on rising ethylene demand. Analysts believe the stock is deeply discounted, guys, making it prime buy before the market catches on. You can see here that the current price is around $14.34. Now, just two analysts for you guys. Jefferies have the target price at $20. That's almost a 35% rise. And Raymond James have the price at $19.90. Again, 30% plus. What this means, guys, is Navigator Holdings is making waves. But let's move to a tech stock that's also quietly dominating. Next up, I've got Texas Instruments for you guys. This is, surprise, surprise, a semiconductor company. Now, why is Texas Instruments undervalued? It's trading well below its fair value with a price to earnings ratio of 37.4 times compared to the industry average of 48, guys. Now, despite strong revenue growth and high return on equity, analysts have some mixed ratings, keeping the stock undervalued relative to its peers. But now with AI and automation driving semiconductor demand, Texan is poised for a breakout. Looking at the current price here at $198, we've got Morgan Stanley targeting a price above 200, and as well as Barclays too. Tech is booming, but now let's talk about a retail stock that's also quietly dominating. Now, many of you may have shopped here, a massive retailer and consumer goods store, but why is it undervalued? Well, TJX is trading below its historical valuation. Just going to pull up the 6-month graph here for you. Despite strong revenue growth and resilient consumer demand, analysts have a consensus price target of $133, guys, indicating potential upside here. With discount retail chains thriving amid economic uncertainty, TJX is positioned for long-term gains. Now, the current price here is at $124. We can see JP Morgan have a target price of $164 on it, guys. Just stepping out to the 1 year, we can see the closest it's got to that was in May. So, we are in the right time for this. And Barclays have a target price on it of $139. So perhaps a good time potentially to get in this one. Remember, this isn't financial advice. Now, this brings me to the end, really, of the three stocks I wanted to discuss today. Short and snappy, but these three stocks are set to surge. What do you think? Drop a comment below and let's discuss in more detail. I thought I'd bring you a bit of variety today. Don't forget to like, subscribe, and turn on those notifications, guys, for more market insights. I'll catch you in the next one.